It's a busy week for U.S. economic data, highlighted by the Federal Reserve's two-day open market committee, which wraps today with Federal Reserve Chair Powell's press conference. So what can we expect from the Fed? Joining me today is Axel Merk, founder of Merk Investments. Axel, it's been a long time. Welcome to my show here at Stansberry Research.
Great to be with you.
So let's talk about what we can expect from Jerome Powell. Some on Wall Street are talking about higher growth and higher inflation, but most economists, I would say, don't expect Chairman Powell to change his dovish message. How do you see it?
Well, first, what we'll see in the springtime, of course, we'll see higher inflation just because of the year-over-year changes. So headline inflation will go through the roof. Some people were screaming. They will almost certainly ignore that. The bigger question is, are they really going to stick through their thing that as the economy picks up steam, which eventually is going to happen, will they actually not be thinking about inflation? My view on that is what they're really interested in is yield curve control in some other ways. They're talking down the yield curve. They're trying to tell the markets, hey, don't at all price in anything. And of course, what happens as a result is that the junk bond yields are at all-time lows, spreads are at lows, risk assets, meaning financial markets, go up. And so he'll stay the course. They are petrified about the taper tantrum. And of course, the more they stick to that theme, that they're not even thinking about inflation, the more they'll create a bigger taper tantrum if and when it does come down the road.
But a tick in higher inflation would be a big win for the Fed, would it not, Axel? With central banks around the world grappling with disinflation.
I don't know what a win is. I mean, the European Central Bank now has climate change as a new mandate. They're changing the goalpost as we come along. They would like this economy to work more normally. I just don't see how that happens when the folks who have the bazooka are ensuring that we have this mispricing of asset prices and not an efficient asset allocation. So it's very, very difficult to get there. We're fostering up these debt piles. But yes, they say that the new theme is average targeting. And the problem is really, how are you going to get to that higher inflation? And I can see that we get there, but if and when we're there, are we really going to put that genie back in the bottle? Are we going to be able to do this the way that the academics do that on the drawing boards?
Axel, what about the monthly buying of 120 billion in Treasuries? Does this continue?
Well, sure. It has to continue for a while. We'll obviously, with this new administration, the deficits will continue. The bigger issue, and there's going to be some stumbling blocks, is the Social Security Trust Fund and the like. At some point, are going to run out in the coming years, and we'll probably do the same thing that the Europeans have done. We'll kick the can down the road, put some short-term fixes, but expect more volatility as we're going to reach some of those more exciting milestones.
What about the nomination of Janet Yellen as Treasury Secretary? How do you think that relationship will go, Yellen and Powell?
Well, the challenge really is that Congress has gotten really a taste that it's okay to spend trillions. And Janet Yellen seems to be very closely, obviously, on the one hand, she is a labor economist. So the sort of stimuli that she would like is stuff that gets money into the pockets of the common people. That means extending unemployment benefits, that sort of thing, infrastructure spending. But at the other end of the spectrum, Biden has an agenda, and during the confirmation hearings, she differentiated between her views and the president thinks. So, for example, higher taxation. Yellen doesn't seem to be in favor of higher corporate tax, but Biden is, and so she's going to go along. But yes, it's going to be a close cooperation, which means we're not going to call it modern monetary theory, but there's going to be close cooperation that the Fed is going to finance the deficits to come.
Finally, Axel, so let's talk about sectors that you think will win and lose post-Fed meeting.
Well, in the medium term, because we got the kind of the Fed foaming everything, I'm reasonably optimistic on just about everything, which is pretty crazy to say that in the short term, both equities and precious metals should be doing well. One of the criticisms, of course, has been that they have been highly correlated. The reason why I like to invest in both is because A, I can afford to, and B, because I think these correlations will break down. And as these break down, I'd love to have some precious metals in my portfolio.
Well, just on a note on that, because I've spoken with you about gold so much in the past, many investors frustrated by the lackluster performance of the metal. It's going up in little staircases. People want a big staircase jump.
Well, I mean, they different. Gold has done what it's always done, and one of the key things that has been frustrating as many investors as possible. So it's doing its job, right? You want to hold ounces, not the price. And every investor is a little different, right? If you want more action, by all means, look at gold miners, right? Dramatically more volatile. There might be some opportunities, but of course the downside risk. There are different types of investors. The gold investor is either the diversification investor, is the investor who believes real interest rates stay low to negative, which will happen as the economy picks up, but the Fed keeps rates, nominal rates at zero. And then there's the speculator that you point out too, who likes to have a wild ride, and those folks are currently looking at a few other things as well.
But Axel, just a note on the miners. Yes, a lot more volatility, definitely more of a speculative play, but still greatly underperforming the price of bullion.
Um, there is relative to previous cycles, yes, there is value in them. Just as everybody's aware, those are extremely volatile. So you want to know what you're doing in that space. We are in that space, very active, and we love it, but it is not for the faint of heart. Now, what we have seen in recent years is that people want to have the cake and eat it. And what I mean with that is they invest in a broad portfolio, and then they like to have gold miners because they're so volatile. With a small allocation, you get a lot of diversification. So you're complaining about gold because it's not as volatile. You want to have a little big allocation to that. And so today, and if people were really petrified, they'd hold all cash and a little bit of gold, but instead they hold equities and gold and gold miners. So that's what I mean with they want to have the cake and eat it.
Very good thoughts. Axel Merk, thank you so much for joining me today ahead of the Fed.
My pleasure.
And thank you for watching. We will have much more for you coming up, so be sure to stay tuned to Stansberry Research. In the meantime, share us where you watch us. I'm Daniela Cambone.